Yeah, so good afternoon, my young family, future billionaires and millionaires. So we are gathered here just to have a quick chat and a quick outlook on how we will be attacking the market coming this week. And as you know, my favorite pair is always the Euro USD pair, because this pair, the price action is very, very beautiful. So as you can see, when you open the higher time frame bias, we can clearly say that Euro USD has been bullish, forming higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Okay, so how do we take advantage of this move? The algorithm, how it usually works is that whenever we take an internal range liquidity, we always target the external range liquidities. And what is internal range liquidity? Internal range liquidity is simply what we normally call the fair value gap. So you can see price has been taking highs, previous highs, previous highs, and the trend won't stop. I'm still expecting this high to be taken out. So how, if you look at the history, how was this high taken out? This high that we have here, you can clearly see price came into the 61.8 Fibonacci retracement, which caused this upward movement. But now again, still price has been breaking previous structure. Now price came and rebalanced at this fair value gap. So as I have told you, when price mitigates an internal range liquidity, also known as the fair value gap, we expect the external range liquidity, or the buy side in this case, to be taken out. So this will become our buy side liquidity. So long term, we are bullish. Long term, we are very much bullish. Price has been breaking structure after structure after structure. So now we want to focus at this key area. This is our key area of concern at this point. So we can see before price came and tested this zone, it created a liquidity pool over here, this accumulation, then price manipulated into this fair value gap. Then we expect distribution to the upside. So at this point, liquidity was taken. So this will become our sell side liquidity, while this becomes our current buy side liquidity. This becomes our current buy side liquidity. So after price taking out this sell side liquidity, it mitigated this fair value gap, having that impulsive move to the upside. Then price came and tested this our current order block. Order block and fair value gap together, so this caused this reaction. And as usual, the way I trade, we can see this is a CRT over here. This is our CRT. Let me mark it well so that you can see it. Yeah, so we have this becomes our accumulation, manipulation, then distribution. Yeah, so that became our distribution. So Price came, accumulated, then manipulated to this key level, this fair value gap, then distributed upwards. But by doing that, it left this another key level, which is where we expect price to form another leg before we go higher. Okay? So how do we take advantage of this move that we are generally expecting to take place? Now that is why I'm here now. I want to show you how we'll take advantage of this coming move. So I'll just delete this. So what is the monthly candle telling us? So in the monthly, we still expect price to come here, but in order for any price to show reversal, the high must be taken out. That high must be taken out. So I'm expecting manipulation this month of February. Then we distribute on March, ongoing March, January, February, March, April, May, June, July, August. We'll be distributing to this key level which we are anticipating price. Then after that, we look for our buy positions to go high. So this high is currently our level of liquidity, which we are expecting price to take. When I open the weekly, now there's something interesting that has occurred. So last week we closed below this candle. Okay? We closed below this candle. So we don't have a reversal signal yet to take out this high. Because since we closed below this candle with the body, I still expect lower price for this week's coming candle. So how will you take advantage of it? We look at the possible key level where price can react. Normally, those key levels are fair value gaps, inverse fair value gaps, and all those sorts of stuff. But in this case, we had this previously violated fair value gap, which will become our inverse fair value gap. So this week, I'm expecting lower prices to this zone to go higher. Okay? So I'll just use color pink to determine the inverse. I hope this is pink. So since we closed below the other week's candle, I'm still expecting low prices because we don't have a reversal signal yet. Okay, up to there, I hope we are together. So now we'll go to the daily and see what we have. So what can cause price to come to this level? To this level, we must take previous liquidity. And that previous liquidity lies in old highs and lows. So we'll have this high, which is accompanied by this beautiful fair value gap. So what I'm expecting this coming week is that we have this to this to this. Okay? We manipulate to this candle, then we distribute to this order block, which will take us higher. Now to complete that overall draw on liquidity, because as I told you, when price mitigates an internal range liquidity, the external liquidity will be taken into account. So this is what I will be expecting. That inverse fair value gap, which if we narrow down again, we will notice there's a fair value gap at that point. You see this 4-hour fair value gap. This is where I want us to take our full pot buys. We'll be taking buys full margin at this point. But before that, we must first reach here. Here at this point, if we refine it further, this point to be exact. So we will buy at this point, we sell it, we dump it down to this point, then now we long it officially to this point. Okay, so let me just screenshot this. So this is what I'm expecting on Euro USD. So how do we take advantage of this current move? We still have this liquidity to be taken out. How do you take advantage of this current move? So when we open the daily, you can see we've clearly formed a CRT at this key level because we closed above it, above this zone after manipulation. So we expect this CRT to be completed. So we will complete it, and that's where Monday comes in. How will we be able to attack that key level? So when we go to 4 hours now, you can see we had accumulation, price manipulated. So this the candle, this huge black candle, the last bearish candle before that push up. This is the candle that we'll be watching. So this will become our current order block over there. So we are expecting price to come and test this order block. Then we will take our buys to this level, over here. This is where we'll be taking our buys, to this level. So this level will help us push price lower for us to now take the final buys. So we will look for sell positions at this point. Again, next week or this week, it's this week. Then now at this point is when we'll take our final buy positions. So get ready for this coming because it is looking very juicy, very juicy. And I will not want you to miss this coming moves. Yeah, so thank you.